Good morning, everybody. It's Tim again. I just wanted to follow up on my video from last night because it is way past 5:30. It's actually 6:30. I've already read over the CPI numbers, so I just thought I'd bring them out to you guys so you guys could see what we were looking at. Okay, so here's what we got. All right, so if you'll remember from yesterday's, and I'll put a link down at the end of this video to yesterday's video if you haven't seen it, but if you remember from yesterday, we were expecting a month over month of 0.2 instead of 1.3, which is what we had in June. We expected the headline to come down from 9.1 to 8.7. And we expected what we called core CPI, remember that's when we strip out the food and energy, to come in at 0.5, down from 0.7 in June. Okay, so like I said yesterday, the most important things that we're going to look at are going to be the headline and the core. Okay, those are what they're going to care about the most. Normally, they care about the core the most for sure, but today I think they're going to care about headline number, this 8.5, because that's 8.7, because that'd be a big drop from 9.1. All right, and so yesterday we kind of looked over some of the different items. Energy was where I thought that things would probably come down. All right, so here it is. Here is the report from this morning, and I'll put a link in the description for anyone who wants to read it. It's just on BLS.gov's website. It's a pretty boring website to look at, but there is some interesting data on here. And so what you're looking at over here is going to be, over here in this column, is going to be, over here in this column is going to be your June to July jump, and then this is your May to June. So what we're looking at here is going to be the column that we're kind of looking at from, what we talked about yesterday, okay? And we'll be comparing it to this column over here. All right, let me put this highlighter on. All right, so really, let's look at food. Food a little higher, 1.0, 1.3. We have a decrease, looks like in meats and fishes. Okay, so really, let's go to all items. Okay, so that's that number. We were expecting to come in at 0.5. And folks, it came in at 0.3. That's a good thing. That's one of the bigger numbers. That is the CPI read. All right. I also want to look at used cars and trucks. Used cars and trucks. Good thing. That's a good thing. Apparel. Down on apparel, which is really weird because we're going into school season. Okay, medical services here. Oh, and energy. I want to look at energy. Okay, energy. So energy and commodities. Oh, wow, look at this. It's all negative. Negative. Wow. That's awesome. I mean, we went from negative 1.2 to negative 11 on fuel oil. Okay, so you got a lot of the negative coming, or a lot of the good data, I should say, coming from the energy sector. As far as prices declining, apparel, transportations, commodities, new cars, used cars. Used cars are down by 0.4. Awesome. We were watching used cars fly through the roof, and that was an anomaly to me. Sports, morning, good education, alcoholic beverages. Let's see how people are doing and having fun. It's up a little bit. So people are going out and having some fun, and they're charging a little more. Not a whole lot. All right, here we go. Owner's equivalent rent of primary residence, 0.6 from 0.7. So it's coming down. That means that rents are going to be, you can start to see the rents are actually coming down. Let me explain this. Owner's equivalent rent is kind of a dumb survey, but it's what the owner of of the property renting it out would expect to get. They basically use a survey. Hey, what are you going to rent your house out for? And they pick a number and they say it, and that's the number that they use. But what that does show is that consumer confidence is slipping because they were at 0.7, now we're going to 0.6. That's showing the CPI data coming down. This is still a good thing. All right, so this is all really good. Everything that I see on here shows that there is a chance that some of this inflation is transitory. I mean, this is just one read. We still have, a couple more meetings, but here's what this does. In my opinion, this is going to give the Fed a great reason to come out and just say, hey, look, what we're doing is working. We don't need to speed up the rate at which we're going to cause inflation we don't need to speed up. We don't need to speed up the rate at which we're raising the federal funds rate. Maybe we could be less aggressive. And let's see how the bond market reacts to all that. And look at this. First thing in the morning, these are your mortgage-backed securities. Sorry, folks. All right, so these are your mortgage-backed securities. Look at that. Just today they've gone up. They've gone up a ton. So the higher that these mortgage-backed security prices go, the lower that the interest rates go. Higher that you see you're not looking at my screen, huh? Okay, so the higher that the mortgage-backed securities go, the lower that the interest rates are going. Okay, same thing over here on the Treasury for the 10-year. So there's some good news. Good news in the stock market, the mortgage industry. All the markets really are going to probably rally a little bit on this information. We're probably going to see the Dow when everything's open up. 6, 7, 8. Yeah, soon. Here you should see the Dow and the S&P and everything should rally. So this is a good day. This is good information. Glad we didn't see something like a 10.1 read, something like that. Really destroy things. So it sounds like things are getting a little better. Anyway, that's all I have for you today, folks. Hope you enjoyed this information. If you liked what you heard, consider subscribing, liking. See you in the next one.